We are going through a serious process of adjustment. Energy shock, energy price adjustment, commodity price adjustment, demand adjustment. Do you think markets are factoring in a lot of the obvious adjustments which are happening in the world?
I think there is always going to be some adjustment somewhere in the world. World is become so dynamic that every point in time you will have some asset class going through adjustment. Question is how much does it have an impact on the fundamentals of the companies you're invested in. That's where one has to be very selective in terms of what stocks you buy. If you think that these adjustments which are happening around in the world, because there will be some adjustments, are going to be impacting your business in the long run, then you are probably in a low quality business, right? Because if you are in a decent or high quality business, typically these adjustments are something which they can take care of, and in the long run, it doesn't really have much of an impact. See, markets are tricky. When everything is hunky dory, there is no worry. There are no such violent kind of movements. Markets are high, and you always keep on worrying about the valuations of the market. Whenever markets correct, there are things which are really worrisome, and you can extrapolate a war kind of a situation into it becoming a nuclear war, or any of those extreme scenarios, and that will always keep you out of the market. And by the time the opportunity is there, and you think that okay, let's wait for things to normalize, the markets would have gone up. So you had cash and you went through adjustment period where you got an opportunity, but then you waited for the right time, and then by the right time comes, the markets have already factored in huge valuations. So you'll never get an ideal time to invest. Whenever there is correction in the market like what we have had now, I think that's where things will not look good to enter the market, but that is the time to basically take the bet.
We hosted you exactly 3 weeks ago after the quarterly performance, and that time the world was very, very different. At that time, you didn't think that inflation was going to be a major cause of concern. With crude now hitting a triple-digit mark, the war that we're seeing when it comes to Russia as well as Ukraine, what is it going to mean for companies like yours, which are so dependent on crude?
Yes, it is a problem. There is no doubt on that. Because it is going to fuel inflation, and at the same time, the RM costs directly linked to crude will go up. There is a part of it, in our case, probably about 35 to 40%, which gets strongly influenced by crude prices. The rest remains more or less stable, or is not linked to crude as such, and more linked to possibly other factors. There it is relatively much more stable, and there's no impact as far as prices are concerned. But all those areas which are linked to crude, they will see an impact. To short term, of course, it's not going to matter so much, because we have some finished goods and raw material which will last at least the March will get over, and till April possibly it will carry on. It is going to impact us in the first quarter of next year in terms of profitability. So that is definitely going to happen if we don't raise the prices. So the price rise has to happen possibly to counter this. What will happen to the demand if we do that will be the next question, and that has to be seen when it happens.
Get your views on how you're navigating the volatility, the kind of uncertainty that we're seeing thanks to the geopolitical tensions. Look at crude, triple digit, $116 a barrel is here. What is the advice that you've given to clients? Is it time to take cash off the table?
So see, last 2 years, all the export-oriented sectors in India did really well. The commodities, the IT, the chemicals, the pharma, because the globe was doing well. India was not doing so well domestically. I think now, with whatever is happening around the globe, it's getting clear that, India-focused businesses could probably be a little better because they will not be hit by whatever is happening. But yes, oil being at where it is, metals being at where it is, India is a big consumer of all these commodities, so it can never be good for India. So, like most of our colleagues, we are also watching the market. We are just watching where this uncertainty ends. And whenever this uncertainty ends, see, crude cannot remain above 100 for a very long time, nor can metals remain at these prices. So whenever they end, I think there are great companies out there which will be available at good prices. Like last 2 years, we did not see much corrections. We are hoping some of the great companies come at good prices, and we just buy them because the Indian domestic economy has a very good runway. Once all these macro headwinds subside. So that's how we are also looking at it.